what we're hearing from the Fed is basically, that talk that it will be enough. All they're really saying is, we don't know what inflation is going to be. We don't know how high we have to raise rates, but we will raise them enough to anchor inflation. So it was a very hawkish message. That's one of the reasons why the 30-year is probably going to be well supported, because you can now start to bake in 2% inflation. Maybe they'll ease a little to 2.5 once they finally get there. But they're clearly saying we are going to anchor inflation expectations. And that's how could I say? I think we're paying a Powell tax right now. They made a huge mistake by actually not understanding the drivers of inflation before. And now they do not understand the drivers of inflation either. And they're admitting that. It's really a worrisome situation when the Fed is basically saying, we'll respond to the data and we don't know where it's headed. I think this is super disturbing, and it means we're probably going to have a bigger recession than we need to have. The other thing is their toolkit. He talks about them having a toolkit. When they're trying to support the economy, their toolkit is tremendous. Now, when they're trying to fight inflation, and even though they have a dual mandate, their toolkit is interest rates. That's all they have. So he mentioned a toolkit. They actually have a lot more, but they're unwilling to talk about it. And I think this is worrisome, because one of the key drivers of inflation, I was on the CNBC well over a year ago screaming about when they were saying it was transitory. They weren't explaining why housing isn't going to be a problem and why rents aren't going to be sticky. There wasn't an articulation of transitory. It was a hope. And now what they should actively be doing is saying, we know housing is a big source of inflation. So when the long bond gets anchored, that's a problem, because what it means is the mortgage market is not going to behave like the shorter duration rates. And housing will remain a source of challenge if they succeed in convincing the markets that they're anchoring longer term inflation expectations. Part of their toolkit is to actively manage mortgage rates higher. And they need to sustain this and say they're going to do it, because if they do, what they're going to create is a clear impression that we will end up with a lower rate than we otherwise would need to have if all we did was raise interest rates. I'm really, really disappointed. This Powell tax is on him and his team. They are not doing their job, and they haven't been doing their job for quite a while. And they need, it's not about, they seem to fear doing anything that's quasi macro prudential, and they're treating the orthodoxy of rates as gospel. That means more people will end up losing their jobs than have to if they had the confidence in their own actions.